Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of EVgo, ticker symbol EVGO. And so here I am recording this on Saturday, May 4th, after EV closed on Friday at a price of $1.99, being up almost 5% on the day and being flat in the after hours. And so the reason why I wanted to do this video is because it was requested, so thank you for that. And the reason why it was requested is because their earnings report is going to be released on Tuesday, May 7th, and that will be coming out before the market opens with their earnings call at 11 a.m. Eastern. Unfortunately, I'm going to be at work, so I won't be able to stream it, but I'll include a link to their earnings call in the description of the video so you can connect with them if you'd like to. But yeah, for this video, I'm just going to be going over the daily candles here, some levels that I've gone over in a previous video, but I did just add a couple more that I think should provide some insights regarding how the price will be responding with earnings. And so one thing that does stand out to me is that price closed below $2 a share, that just being kind of a psychological number, thinking in whole dollar numbers. And so I do think that is unfortunate. Another thing that does stand out to me is this red trend line, which is based on these two pivot lows, one being the low hit on October 31st, and the other being the low hit on February 6th. And so they're not exactly at the same level, so it does have a little bit of an uptrending slope to it. And so the low on the 31st was $1.88, while the low on the 6th was $1.93. And so, you can think about that level being right around $2 a share, or actually just a little bit below it, because the close on Friday does look like it was above that line. So I do think that is good. But, if we do zoom in here, we can see that we've had a number of rejections from this level, right at $1.99, right at $2, getting these wicks above, but then closes below, especially with the close on Thursday being at a price of $1.90, which was the same closing price as the day before. And so I do think it would be good to be seeing closes above these highs. And so the highest point that we saw here was hit on Thursday the 2nd, being at $2.02, while it was $2.01 on the 1st, and the high again was $2.01 on Friday. So we really need to be seeing a close on Monday above $2.02. I do think that would be suggesting strength and that the price could be going higher following earnings, especially if the price was to get above $2.06. Because, if we do look here from this Fibonacci retracement, the 236 level is at $2.05.6. So getting a close above that level could be suggesting that the price is above these multiple levels, acting as support, and they could be serving as a launch pad following earnings to move up to the next level, right around $2.30. So the 382 is at $2.30.7, while the low from February 23rd is at a price of $2.29.5. So really like $2.30 plus or minus 5 cents. That does seem like it will be a pretty key level, likely to be resistance since it was support over here. But if price does go up following earnings, it's quite possible it will be going past these levels and they will be acting as support. So do keep an eye out for that. But if it does look like it's being weak before earnings, it might be returning to the low of $1.65. So do brace for that, because that is always a possibility. And do pay attention to the close of Monday, because I think that will be key. If it's above 202 or 206, there's a lot of strength there. If it's below $2 a share, that does suggest that it is bumping into resistance. And, it's good to be buying at support, selling at resistance. And right now, unfortunately, it does look like it's at resistance. So it might be good to just kind of wait and see what happens. because I think that earnings will, as earnings usually do, result in some volatility. If it's to the downside, it's not really that bad just going to 165. Hopefully that holds. But if it doesn't, there might be some great dip buying opportunities following earnings. So do also keep that in mind. And I also did want to throw up the volume profile here because we do see a pronouncement of this shelf sticking out right around $2 a share and then moving up here to right around $2.40 to 50 cents. And so I do think that that could also be serving as some resistance or potentially getting up to here like this orange downtrend. There might be some resistance up there around $3 a share, and it would be great if price could get up there, but it may be more than just earnings that it needs to get to that level. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching, and thanks for the request. Take care.